I'm about to flip the script and change the game plan. I'm about to boss it up and be my own man. Credit Karma say my score around in the six. I heard that paying mortgage way less than paying rent. Equity, tax breaks, make no mistakes. Money piling out, watch my co-workers hate. Anyway, rate increase, no way. Just gotta raise on my job, more pay. I'm on Realtor.com, Zillow every day. I think about it all the time on my lunch break. When I want it, best believe I'ma get it. I'ma get me a house, it might take a minute. My boy Los got a VA loan, he a vet. I might holler at him, asking what the next step. I'ma get that, I'ma get that, I'ma get that, I'ma get it.
Hey, what's up, fam? It's your boy Ed, the rapping real estate agent, the people's champ. Y'all know who it is with the Averhome Group, Fathom Realty. I have Rita Hazel and Rebecca Monell with Loan Depot on my show again tonight. Welcome to the show.
Thank you.
Thanks,
All right.
Ed.
All right, all right. And we're going to talk about some of the myths about the home buying process. Rebecca has gathered the top myths from potential buyers that she's going to ask us some questions tonight about what a lot of people are saying in the streets about buying houses and why they're kind of hesitating about buying houses.
That's
So,
right.
tell me about some of these myths, Rebecca.
Yeah, so let's get straight into it with these myths that we hear in the street. So number one, do you need a 700 credit score to buy a house?
Okay,
No.
Yep, that would be a no, Rebecca. That would be a no.
Why?
And the government backs most loans, so that is a big myth. In general, government loans like a VA, USDA, or FHA loans start at 580. It's what the government has listed. And then conventional loans start at 620. There's several different lenders out there, and the lenders are able to set whatever they want as the credit score for their organization. But it's important if you're a consumer to know that there are several different opportunities for you. You need to make sure that you are finding a match of lender for your credit score, if that makes sense. And then during COVID, there's been some adjustments. So you'll find that there's some temporary overlays right now where a lot of lenders are mainly 620 and up.
Okay.
Is there any advantages of a person having a 700 credit score versus a 620?
Absolutely. Basically, it will help their interest rate. The interest rate is dependent on the credit score. That's one of three components that directly impact what you're getting and receiving in a rate. So it is good to have a higher credit score, but you also want to realize when rates are at an all-time low, like right now, the highest rates that you're going to see is likely in the fours for most standard lenders across America, where they're doing a lot of government-backed loans. So the rates right now are between the twos and the fours, and so even somebody with a 620, 640 credit score right now is going to be able to get a low rate in the threes because the interest rates are low.
Oh, wow. Okay.
Oh, interesting. Good to clear that up. Next question, we'll go right into it. Do you need 20 to 30% down? Does the process take a long time? So it's a two-part question. Do you need the 20 to 30% down? And does that process take a long time?
Okay. And I know Ed and I both can probably comment on that since he's writing contracts all the time, but definitely as a first-time home buyer, the minimum down payment is going to be zero because the USDA home is zero. And that's just not for a first-time home buyer. That actually is any buyer. For USDA, if you qualify for that loan product. For a conventional loan, it is 3% down for a first-time home buyer. If you are a repeat or a move-up buyer, it's 5%. So even the minimums for someone who's a repeat buyer or move-up buyer is only 5% as a minimum. And then for FHA loans, the minimum is 3.5% down. And again, you don't need to be a first-time home buyer to be able to obtain a FHA loan. If you're a veteran, again, a lot of people already know it's 0 down. So anything after the minimums, you can put in as much of equity into your home as you would like. And that's going to help bring down the price, and you can have equity in your home. So that's really good. But the minimums, I think, was what your question was. And so those
Yeah.
are truly the minimums for those loans.
And
Wow.
even with investment properties, investment, what is it, usually 15-20% down for
Um,
investment?
Yeah.
it's 15 for investment in general on a conventional loan. A 15% down is normally the minimum, and most people, do believe that it's just in general that it's 20 to 30%, but there are loan products that are only 15% down as long as you meet all the criteria for that.
Good.
And
That's good.
go ahead. I'm sorry.
No, I was just saying that's good to clarify that entire myth about you got to have 20 to 30% down. Because a lot of people, that's kind of what hinders them from even attempting to inquire about buying to begin with, because they feel that they have to have, this amount in savings. They're not really familiar with, the different types of percentages for down payment.
And in terms of the time frame, I've had clients that got into houses from beginning till end less than 30 days. So it really just depends on your credit profile, and it just really depends on, you. So people are
Right.
stages of the process. Sometimes it could be longer than that if you want to have a house built. But
That's
a lot
right.
of builders, they have a lot of inventory out there as well. So it just really depends. It can be, I've seen 3 weeks, 2 or 3 weeks. It was probably the fastest, and I've seen some as long as 8, 9 months if you're having a home built.
And
Yeah.
what do you normally see on down payments? That might be interesting from your perspective. You help people buy a lot of homes. Like, what's the average that you see on down payments?
So the average is about 3 to 3.5%. Now, if they have to pay their closing costs because it's real competitive out here, then it may be a little more than that to include closing costs. Sometimes we can get the seller to pay, but it's just still, with COVID, it's still highest and best out here. So you
Right.
still, you still may be paying your own closing costs.
Okay. So what about 401k? Can you use that for down payment?
Definitely, you can use 401k. 401k is retirement funds. It's probably one of the only things that they will allow without penalty for you to utilize your 401k funds for purchasing a home. Everyone's 401k is different though, so that's a
Okay.
wonderful question for them to call up. Um, Ask your 401k administrator, hey, I'm looking at purchasing a home. What are the terms if I need to take funds out? But that's a common way, and a very common way that people use to be able to purchase their home. So it generally takes the 401k company anywhere from 3 days up to 2 weeks to send a check. The process is they will ask you for your purchase contract. So that's something that Ed would have as the purchase contract. And they also ask for a loan estimate. And as a lender, we would have the loan estimate, and they send in those two documents to prove, look, I'm purchasing a home, and these funds are what's needed for my home.
Yeah, so a lot of people are, they're told, about down payment assistance and all of that. But if a lot of my clients are using their 401k money, so they don't have to worry about down payment assistance. I'm not talking like it's bad, but it gives you more flexibility sometimes if you don't have to use down payment assistance, and it makes for a cleaner file. Um, and sometimes with down payment assistance, they have additional inspections, and sometimes it can cause delays with the closing. So that's,
Well, the bigger and Ed, that's a good point that you're pointing out, because a lot of times, particularly sometimes the down payment agencies will suppress how much a person, what their debt ratio is going to be, and so you might have somebody who really wants a house for 250,000, which might be fine with the lender, but it's not fine with the down payment agency, and so a
Right.
lot of people will use their 401k 401k instead to be able to get the house, that's going to fit their family better.
Good. Good. So this one, I think this is a question like a lot of people have had to, as it pertains to down payment as well. Can you get a gift from a friend or a family member for down payment?
You can, for a primary home, you can get a gift, and from a family member. It needs to be an immediate family member, and basically they can gift you those funds as long as they're trackable back to their bank account. That those funds are coming from their funds out of their savings account or their checking account. That's no problem at all.
That's wonderful news.
Yeah, absolutely. That's not an issue. And so many people who are buying their home, you might have an uncle, an aunt, a grandmother who's willing to help you. And so that works out fine for down payment funds.
I have a question that's not on there. What if someone needs help and maybe they need someone to co-sign? Can they get a co-signer to get a loan sometimes?
You sure can, and they don't need to be a co-signer who's going to live in the home. It can be, you're buying a home here and a parent is in California or New York, or a friend or a family member. It's called a non-owner occupied co-borrower. So sometimes that's really helpful to add someone depending on the house that you're looking for, and there's not restrictions. They just need to meet the same guidelines.
Good.
It's good to know.
Okay. So when it comes to down payment, at any point, do you have to pay the down payment assistance back? Is that such a thing if you accept or decide to go the down payment assistant route?
Yeah, if you are utilizing down payments, it's whatever that agency's parameters are. So most of them are forgivable funds, but some are where you do have to pay the funds back. But most common ones are forgivable, and what that means is the down payment agency might have a term of 10 years or 15 years, and they're going to forgive it over that time frame. And towards the end, they'll prorate it off. And so if you're using those funds, one of the things that you'll want to do is to, if it were a 10-year term and you moved out in year 7, you'll pay those funds back as part of the proceeds of selling your home. If it started prorating in year 7, then you would only pay part of it back if you sold in year 9. But if it's after year 10, all the equity that you've built into the home is yours, and so because it's already fallen off title.
Yeah. Okay. That's definitely. Thanks for that. Because so it's safe to say you do need to be aware when you're doing down payment that the down payment agencies have their own requirements as opposed to the lender as well. So that's important to understand.
Rebecca, you bring up a great point, and most of the time their underwriting guidelines are stricter than the lenders in many cases, and so you do have to be aware that your file is going to go through. If you're using an agency, it'll go through an underwrite with the lender, and then it'll also go through an underwrite with the agency. And but as long as you're working with someone where there's an approved lender and an approved loan officer, a lot of times that's seamless to the customer. Because they're only providing documents to the lender.
That's right. Yeah, that is important. The next question is, will student loans affect my buying power?
Oh
my God. I think that's the infamous question. Ed, you got a smile on your face.
No, Lord, it does. It
Tell me about it.
Okay, let me try to tackle this, because it's a big question, because there are people who, whether you have $5,000 in student loans or whether you happen to have $100,000 in student loans or $150,000 in student loans, you're still wanting to purchase a home. So what you need to know is that the government loans, like an FHA loan, USDA, or VA loan, will assess a 1% towards your debt. So that if you had $20,000 combined in student loans, then we're having to add $200 a month to your, at a minimum, to your application when we're processing it. And so, yes, that's an extra debt. So it'll take a little bit away from your debt to income ratio. Now you can imagine if you're somebody with, $80,000 and we're adding $800 to your debt ratio, that could actually kill your loan, because that's really could be the principal and interest to a home. So in that particular case, what you need to know is that the conventional loan handles student loans differently. And a conventional loan, instead of taking that 1%, if you're on an income-based repayment plan, I can use the income-based repayment plan, even if it's zero. And so, you could be somebody with $100,000 worth of student loans, but as long as your file can approve conventional, I very well in that case could use zero so that it does not affect your buying power. So that's the quick lesson on that.
Wow,
So
awesome.
how would a person go from FHA to conventional? I mean, I know it just depends on the profile, but what do they have to do to, like, if I have a student loan and I know I have a lot of student loans, so I really would want to go conventional if I could. So,
well, the difference between FHA and conventional is set up it's a government-backed loan, so it's set up to be flexible, not to be as strict as a conventional loan, which is, it's backed more by public funds, whereas the FHA, VA, and USD is backed by the government. And so the way you want to look at it is they're easier loans to qualify for. So a conventional loan, if you had a 30-day late payment in the last 90 days, you're likely not to approve conventional, just as an example, just trying to give some clarity to it. Whereas if it were an FHA loan, and you have the rest of your history looks pretty good, it can definitely approve. So the difference is that you're likely to get more people approving for an FHA loan than for a conventional loan. So if you're someone who has a lot of student loans, we know we need conventional. And so, you're going to look at the profile, and whatever's needed to get them to conventional, we're going to talk about that and look to get people to that loan, because there's really no way that they can purchase on with using the government FHA, USDA, or VA loan.
gotcha.
Yeah. Yeah. Do you get a lot, Ed, a lot of clients that have a lot of student loans?
I do, and we work through it, and we just tailor everybody's situation and line. Rita gets their profile lined up based on what their individual needs are.
Yeah, over the years, I think I've seen a lot of loans too with a lot of student debt, but somehow we still manage to make it work.
Exactly.
Okay.
That's right.
This is a big one because a lot of people aren't really familiar or have clarity on when it comes to bankruptcy. So the question is, can I buy a house after bankruptcy or foreclosure?
Okay, that's an easy one. So basically, an FHA loan in general, it's 2 years. So 2 years after a bankruptcy FHA loan, you can go back in and purchase. There are things for extenuating circumstances that are less than 2 years on an FHA loan, and then for a foreclosure, it's 3 years. And so on that, it's 3 years for the 3 years on the foreclosures. And again, that's for the easiest way back in is through a government loan. The conventional loan, it's a longer time period. So that would be the fastest.
Okay. Good. So I just want to kind of summarize and touch on, and I'll go through these questions just in case anyone didn't hear, if we have any questions or comments, in the feed there, Ed. But so you don't need a 700 credit score to buy a house, correct?
Correct.
You don't need 20 to 30% down to buy a house, correct?
Correct.
Mm-hmm.
You can use your 401k as a form of down payment. That's a yes?
Yeah.
You are allowed a gift of some sort from a friend or a family member for down payment.
Absolutely.
Okay. And do we pay these down payment assistance money back? We do, and I think you went over that, Rita, when you said the criteria for the agencies are a little bit different. So they prorate depending on how long you're already in the home and time frame that goes by. Okay.
Mm-hmm.
And student loans, they do impact and affect your availability of how much house you can buy.
Correct.
They do, but there's a route out of that with conventional loans, and so
I love it, Rita.
that's really what we're going to target if you happen to have a lot of student loans, for sure.
Yeah. And that good old that bankruptcy, there is a way out of it too, to buy again.
There is, and I mean, Rebecca, there's so many myths that are out there for people purchasing homes.
Yeah.
Like you said, student loans these things are not going to stop you. I'm hoping that what people understand is that you just need to know what to do. I often, people are calling, they want to know, like, hey, I had my car repossessed for some reason 3-4 years ago during the downturn. Is that going to stop me? No. I have a whole bunch of medical collections. Is that going to stop me? No, we don't even count medical. I forgot to file my taxes 2 years ago. Is that going to stop me from, owning and buying a home? No, I just need for you to go file it now. And then, we need those on file. And then if we're using that particular year. So there's so many myths that are out there. And I think that the major thing that you really want someone to understand is that there's an answer that is not probably the one that they expect. I have Verizon collection that's, $800. Do I need to pay that off? And you should get a consultation before you do anything. So even though you might be hearing this, every situation is slightly different, and they're not all handled the same. So,
and the main thing is just be upfront when you're talking to us and you're doing your application. Just let us know what the situation is. Don't try to hide or think it's going to work out in your favor by not telling us. If you let us know, then we can kind of tailor it based on your situation.
Exactly. That's a great point you bring up, because no one else is going to bat for you but the loan officer. So it is important to be transparent up front so that they can find the best solution for you. Absolutely.
That's exactly right, because Ed definitely will find you a house. That's why we partner with him. No one has to worry about will they find a house. Ed, just the market in Charlotte, some people are finding it too high right now. What's your take on if they're finding it too high? What's happening in like Fort Mill, Gastonia?
Well, so my take on it is what I'm seeing a trend of a lot of my buyers go to the outskirts of town to get better deals. For example, Gastonia, there's a $30,000 price difference from Gastonia than Charlotte, probably even areas. So,
and light rail's going out there.
Exactly. Light rail's going out there, and just a lot of people are moving there, just getting smarter because they want to make money. So that can be the difference in you getting something a little nicer or bigger, so it's just people are more open to that. Whereas before they were like, no, I want to be in the city. But now people are starting to see the vision. And it's the same trend that's happening around, like in the outskirts of Atlanta and all these bigger cities. People are moving to the outskirts so they can get more for their money. But the ones closed-minded and they're like, no, I have to be in the city, that's where I'm seeing more of the struggle. Is not, as high as you want it to be because the cost of living is higher close.
Yeah, it definitely is closer to the city. The cost of living is higher. Everybody wants to be in the city, huh?
Yeah. Well, it's a great time to buy, though.
What was that?
I was going to say it's a great time to buy.
Oh, yeah.
People with the interest rates being low, because you can maybe afford more than you thought you could afford 6 months ago.
Yeah. Mm-hmm. Yeah. Man, we covered a lot here tonight. Those are great questions.
almost 30 minutes, but I appreciate you guys being on the show.
We appreciate it. Thank you.
Thank you.
Yeah, we do. We do, Ed. Thank you so much. And anyone who has questions, send those to Ed, and we're happy to continue answering them next time.
Okay.
Absolutely.
How can they reach you? They can reach you online, right?
They can reach me online, and definitely my email address is below. That's rhazel@loandepot.com. So definitely reach out, and I'm at Loan Depot. Just put in Rita Hazel, Hazell, and make sure that you see that link and nice picture of me, and then click, and we'll be connected.
Yeah. And my contact, because you're probably going to get to me too, it's rmonell, RMONELL @loandepot.com.
All right. Sounds good. Well, thank you all for being on the show, and thank everyone for tuning in.
Yes, you guys have a great evening.
All right, let's
Have
go.
a great night.
The rent man done went up on the rent man. He ain't about to get another red cent, man. I'm about to flip the script and change the game plan. I'm about to boss it up and be my own man. Credit Karma say my score around in the 6. I heard that paying mortgage way less than paying rent. Equity, tax breaks, make no mistakes. Money piling out, watch my co-workers